Hey guys, what's up? Tomo from Market Zone here, and this is a new weekly market analysis video, but this time it's a trading lesson and it deals with butterfly patterns. Hey guys, Tomo from Market Zone here. Thank you for coming back to my channel and thank you for watching this video. This time it's a trading lesson that I'm sure that you're gonna like, especially if you are not familiar with harmonic patterns. It's about advanced patterns, it's about butterfly patterns that, as Trump says, are very nice patterns. It is also highly relevant because we have a bearish butterfly pattern, a monthly bearish butterfly pattern that I mentioned in the weekly markets analysis this week. In UK 100, it's the UK FTSE as we approach the UK elections. I'm going to elaborate more about this harmonic pattern that we have in the UK 100. What is the potential reward? What is the risk? What are the potential target zones? And how do you set them later in this video? But for now, let's start by saying, what is a butterfly pattern? A butterfly pattern is a formation made of 5 points, similar to the bats, the Gartleys, if you're familiar with harmonic trading. And if not, you can read more about it at www.themarketzone.net. Go to the Learning Center tab and see the harmonic trading section there. You can read more about bats, Gartleys, and the rest of the harmonic patterns. It is also based on Fibonacci levels, just like most of the harmonic trading patterns. The difference is that the CD leg is extended beyond X. You can see here in the bullish formation that D is below X, and in the bearish formation that D is above X. That makes butterfly patterns extension patterns. Here you can see a bearish butterfly pattern that was found on USD CAD, and that's the daily chart. That's a daily bearish butterfly, and this bearish butterfly generated a move of about 400 pips in USD CAD and it hasn't reached the final target zone yet. The key elements that make a butterfly patterns are B, near the 78.6 Fib correction of XA, that's XA, that's B, 78.6 correction. Here it's an 85, just above the 78.6, and the D point is a Fibonacci extension level of XA, same XA, it's a 127 extension of X to A. These are the key parameters that make a butterfly pattern. Other than that, we usually want to see also an AB equals CD pattern forming with the wings. That usually creates a perfect butterfly, and also that the C point is a 50% or 618% Fibonacci retracement of A to B. The potential reversal zone in butterfly patterns, the PRZ, that's the zone that you want to enter the trade, is defined differently from what you used to see in bats and Gartleys. This is an example of a Gartley pattern that we traded in the elite zone not too long ago, and the PRZ, that's the completion of the Gartley. The PRZ ends below X. X is the limit of the PRZ. In butterfly patterns, since the D point is already below X, we cannot use the same method that we did with the bullish Gartley. We cannot use the X point to limit our PRZ. That is why we need a different approach to define our risk, to define the PRZ, and we are doing it by using Fibonacci tools called Fibonacci extension and Fibonacci inversions. Here you can see how I created the PRZ for this bullish butterfly on Aussie CAD by using a Fibonacci extension tool from A to B. I pulled a Fibonacci tool and used the extension level from A to B, and also the Fibonacci inversion level of the Fibonacci tool that I pulled from B to C, also to see the Fibonacci extension levels and find Fib confluence zones that create my PRZ. Here you can see the first confluence zone, here you can see the second confluence zone, and that created a 50 pips wide PRZ that defines my max risk for this bullish setup. Now that you know how to define your potential risk, you need to know how to define your potential reward, meaning setting your target zones. That is being done by pulling a Fibonacci tool from A to B. This is the UK 100 monthly pattern that I mentioned before, and as you can see, I pulled a Fibonacci tool from A to D and I got 3 target zones. The first target zone, as you can see, is the 38.2 Fibonacci level of the A to D move. That brings us pretty much near 6,000. The secondary target zone is the 50 Fibonacci level, and that brings us pretty much near 5,500 and the 200-month MA line. Third target zone for butterfly patterns is set at the 618 Fibonacci level of the A to D move. In this specific scenario, in this specific monthly pattern, I'm not considering target 3 at the practical level because it sits below a very strong support line, the 200-month MA line. So in this specific scenario, I would settle for target 1 and target 2. But you need to know theoretically that target 1 is set at the 38.2 Fibonacci level, target 2 is the 50 Fibonacci level, and target 3 is the 618 Fibonacci level of A to D. That's it, guys. That was the short lesson about butterfly patterns. But if you want to read the full article, the full blog post, and see more trading example, read more about the trading rules and trading guidelines, you can do it by visiting themarketzone.net, go to the blog section and find the harmonic trading section there. You can read the butterfly pattern. Of course, I will leave a link below. And don't forget to subscribe to my channel so you won't miss the next video, the next trading lesson, or the next weekly market analysis video that I'm posting. Thank you very much for watching. See you in the next video.